Well, hello, everybody. Stephanie Dahl here. And at Dahl Fisher, we are your estate planning business and real estate boutique law firm here in Denver. And today I have the pleasure of having Matt Moriarty with me, and he owns the Moriarty Agency. And so we thought it would be awesome today to have a conversation about insurance for estate planning specifically. There's all types of insurance out there. And Matt could spend, I'm sure, hours telling us about all of those different types.
But you don't want that at all, so.
It's kind of like when we talk about the law. If you talk about insurance, we could put it on the call map to put people to sleep a little bit. But we wanted to talk today about what really policies do you need in place when we talk about an estate plan. So before we get started there, I just want to have Matt introduce himself. Tell us a little bit about you and your agency and what you all do there.
Yeah, well, perfect. So my name is Matt Moriarty, as aforementioned. I am a fifth generation Coloradan. I know Stephanie is a little bit jealous of that fact. So I grew up here. I know all about, Colorado and some of the risks. I have family members. My father was an insurance agent. My brother works in insurance. My brother-in-law is in insurance. So I grew up in insurance. And the last thing I ever wanted to do, believe it or not, was actually go into the role that I currently possess as an owner of an insurance agency. So, I come from a strong background of helping people and putting service first and being, someone who, a lot of people don't realize the risks. I know I didn't, even though I grew up in an insurance family. I had no idea what any of the coverages meant. And I think that's a detriment to most people, especially people with assets and those without assets as well. Just because of the fact that, there's so many companies out there that preach the, 15 minutes could save you X amount of dollars. But what does it really do if you actually need to use your insurance? So that's kind of a goal of our agency, and that's the way we built it from a foundational standpoint. And that's about me. So I am married. I do have two lovely daughters, a 10-year-old and an 8-year-old, and love them very much. And that encompasses. Unfortunately, I'm a pretty boring guy, which is good for the insurance industry.
You're on their low risk category. So
Exactly.
So Matt, from your at your agency, y'all provide tons of different insurance. Is that right? Like all across the board, from auto insurance to life insurance, umbrella coverage, all that kind of stuff. Correct?
Yes, we do everything. We like to call ourselves risk managers as opposed to insurance, right? What we do is from a consultative approach. We sit down with a client and figure out what their risk is, and once we determine that, we present proposals that show in our experience the best way to mitigate said risk. And it's up to our clients to decide if they want insurance to, cover that risk, or if they want to self-insure, which is important because of the fact that going back to what I said earlier, most people think that, insurance is the same everywhere. And it's really not, especially, auto insurance, a lot of it's the same. Whether or not, people end up, paying out claims and stuff like that, that's a little bit different, but all the coverages are the same, right? But when it comes to some of the, homeowners insurance, there's so many different homeowners insurance policies out there. Life insurance, what are you actually looking to accomplish, right? We're long-term care, there's so many different avenues that a lot of people just don't understand. And if they try and understand, if they try and dig too deep, then they could probably fall asleep, like we talked, kind of like the law, right? Yeah. And so, we kind of try and make it and so that it's understandable to our clients to make sure that they know the best way to protect themselves from risk, and both their current and future assets are protected.
Absolutely. So tell me a little bit, and you kind of mentioned three of the ones that I'm most familiar with when we talk about estate planning, but let's talk about how umbrella coverage, life insurance, and long-term care insurance plays into an estate plan. So from a risk mitigation perspective, how do you talk with clients, and what are each of those kind of different insurance, what do they do for your clients?
And that's a great question. And first of all, we always recommend everyone get an umbrella policy. And people can say, well, I'm a 22-year-old and I have, I don't own a home. I don't have, any assets. Why would I want to get an umbrella policy? And before I go down that road, let me explain what an umbrella policy is, right? So umbrella policy is a policy that actually would cover on top, it's an excess of the liability limits that you have on your home, your auto, if you have a renter's policy, any of those types of things, right? Why is that important, right? I'll give you a perfect example. We had a client, I can give you many examples, but we had a client who was driving downtown, like this was 4 years ago, was driving downtown and ended up hitting some black guys, right? They ended up running into a pedestrian. In Colorado, obviously black ice, you can't really see it. It was a morning, kind of like it was this morning. And when they hit that pedestrian, unfortunately, fortunately, the pedestrian lived, right, first and foremost. But unfortunately, they sustained some serious life-threatening injuries. Okay, and our client at that time had $250,000 per person, $500,000 per incident with regards to their liability coverage. And that's a lot of coverage, right? Which seems like a lot, but unfortunately, in most states, and especially in Colorado, Colorado is a non-creditor protected state. And what that means is if you're sued, they can put a lien on your home first and foremost, if you don't have the money to pay it. They can take your checking, savings, basically everything that you've saved up for, including retirement once you start pulling it out, right? They can take 25% of you and your spouse's income. So if you make $100,000 a year, guess what? You now make $75,000, right? Because they're going to garnish those wages because that's what they can do. In our case, once all was said and done with regards to attorney fees, with regards to the injuries themselves, loss of wages, and rehabilitation, it was well over $600,000, right? Now, remember, I just told you that they had $250,000 per person, $500,000 per incident. That means the insurance is responsible for $250,000 of that, right? So if you do simple math, $600,000 minus $250,000 is your share of that, right? Now, most people don't have that kind of money just sitting around, and even if they did, it's for to build their empire. It's not necessarily to in the event that they get in an accident. But these things happen all the time, right? It's not like we wake up in the morning and look into the mirror and say, "Well, I'm going to get in an accident today," right? But they happen all the time. You see them all the time, right? And it's just a matter of, is it going to be a fender bender or is it going to be a really bad accident where your assets are on the line? Okay. Thankfully, in our situation, we had advised our client to get an umbrella policy. So on top of that $250,000, they had an additional $1 million on top of that, right? So they had at their disposal $1.25 million, right? So they didn't pay anything out of pocket. The insurance company paid the entire everything, right? And as you can tell, can be the difference between having a bad day and a bad life. And umbrella policies are so inexpensive, and they don't just cover auto exposures. They also cover homeowners, right? Dog bites, right? If you're having a party, not in today's world, but if you're having a party, if you're having a party on the deck and your deck collapses, right? So all those people sustain injuries. You're responsible for that, right? Especially if in the event that there was something that you do that could have been prevented. But it's things like that. Also libel and slander. I always recommend people who have children to make sure that they know that libel and slander is covered as well. And attorney fees are covered automatically with the umbrella. So you have a kind of like an attorney on you can on retainer right there. So It's really big. And then plus when people have, teenage kids, they don't know what they're doing when they're driving, and you can't be with them, right? And there's a reason that the premiums, we'll find this out one day, right? I mean, I'm going to find out in about 6 years what mine's going to cost. But there's a reason why, when kids first get their license, that your insurance is going to jump up, right? Because statistically speaking, children are more likely to get in accidents. 16, 17, 18, all the way up to 25, they're more highly at risk, right? And so if they get in an accident, guess what? The parents, if they live in with the parents, their assets are now at risk, right? We go into rental properties. If you own rental properties, you are at risk in that instance too. And we can get it so that the umbrella policy will cover your rental properties as well, especially if you own them outright, as opposed to an LLC or anything like that.
Absolutely. And I think it's important to note on these is the reason, we recommend also from an estate planning perspective for an umbrella policy is what we don't want to have happen is we create this wonderful estate plan and everything else. And then something happens and now we have to start liquidating assets in order to pay for, that bad day that occurred where it truly was an accident, but unfortunately there is economic injury sustained to the person in that case. And so, we have to end up selling up, liquidating a 401k or selling a rental property or doing something like that. We don't want to do that because that's your estate. That's what you're going to pass to your family, to charities, whomever. And so if we can kind of insulate those assets from creditors or, anything that happens, it's a good thing. So then let's talk a little different, but life insurance.
Mm-hmm.
I think we all kind of know life insurance generally pays out when you pass away, it pays your beneficiaries. And obviously there's whole and term. And I think we could spend a long time going into what whole life insurance can do and all these other things. And, I'd probably tell people we won't go too far into that because if you have questions about it, it's a great time to sit down and to find out and ask you. But, how does life insurance how do you work with clients and handle it as regards to insurance with estate planning?
Yeah, that's a great question too. And quite honestly, we don't get into, whether it's term or whole life on the first conversation anyways, because the most important thing is finding the coverage that is correct for the situation that you're looking to accomplish, right? And getting you approved, right? Not many people know this, but there's like 16 different rate classes with most carriers. So you can, when people say, hey, can you quote me, life insurance, a little different than quoting an auto policy because we have that information already at our disposal. When it comes to life insurance, we don't know. I'll tell you, we've had people who that run, triathletes and things like that. And when they come back, they don't know what's going on under there. They may look perfectly healthy, on the outside, but you don't know what's going on underneath. So, but those are the two most important things. Yeah. And then you get into, what's the best strategies and all that stuff. But specifically speaking, why do people get life insurance other than, besides just, first and foremost, income replacement, right? A lot of people, if you're looking at it from, if let's say I made, $100,000 a year and I'm the sole provider for my family, right? If something happens to me, all of a sudden my income goes away, right? Not only is, my family devastated, but my ability to provide for my family just went away, right? So my wife at that point would need to either, get a job that makes the exact same amount that we were making previously, or, sell the house, do everything. And unfortunately, I've seen situations like that. It's really sad. When people just lose everything because they don't have, a proper life insurance. A lot of people think that, I have it through work. It'll cover me. A lot of times those are, again, if it's $150,000 you have through work and you make $100,000, it's not going to do much for your family. So first and foremost, that's what we look at from that perspective is the family preservation to make sure someone's salary is able to take care of that. Because if something happened to me, I don't want my family to have to live a different lifestyle. I want them to continue. They're already going to miss me, right? They're already going to be devastated by not having another parent there and all that stuff. So I want them to take care of that. What are some other strategies? Well, business owners. We work with a lot of business owners. We do commercial insurance as well. And from that standpoint, business owners, a lot of times you'll get a partnership, right? So let's say that you and I decide to go into business together, right? We're 50-50 partners, okay? And in doing so, let's say we have a $1 million business, right? We've grown it over the last 5 years and we're up to $1 million. But then something happens to me, right? And I'm out of the picture, okay? And you can get more into this with a buy-sell agreement. I probably should have let you say that first, but you would want to get a buy-sell agreement. You talk to Stephanie and get a buy-sell agreement first and foremost. But if something like that happened, all of a sudden, you and I mean, you're in business with my wife if we haven't sat down with you and determined exactly, what we'd like to happen in the event something were to happen to one of us. And the other thing in that situation is you now need to either go into business with her or pay her off, which is $500,000, right? And you're looking to continue to grow the business. In that instance, you don't have the capital, more than likely, of $500,000 just sitting around to pay off my wife, so that you can, acquire 100% of the business in that instance. So we work with, attorney or an accountant, CPAs, to get them life insurance in place, because from that perspective, in this scenario, like I would have a policy on you and you would have a policy on me. And so you're paying premium for it. But if something happens to me, then you're my beneficiary. So you get that $500,000 and that you just give it to my wife, buy her out. And, from a cost perspective, it's pennies on the dollar. So
Absolutely.
Strategy.
Absolutely. No, and I think those are important. And, I think it's why it's important. And we take this approach with our clients, and I know you do too, but really to look at, an entirety of, what is their business? What is their home? What is their family? What are their assets? What are their liabilities? Because all of those things come into play when we're trying to figure out, what do you really need? How do we put this together for you? So I think that's really important. And, it's important to bring up that there are businesses involved here too. A lot of times with our clients, it's not just straightforward. We have the house, life insurance, and that's it. And,
Yeah.
a lot of times we use life insurance to fund trusts, right? So we make the trust the beneficiary, and then it can fund the trust that will pay for children's education, to pay for their down payment on their first property. All of those things kind of come into place.
Charities, all that kind of stuff.
Absolutely. So I'm going to jump around a little bit to a question we get asked a lot, which is long-term care insurance.
Mm-hmm.
Because, we often get asked, how do I protect my assets? How do I protect my assets if I have to go into a nursing home, or if I have to, need additional care? How do I protect those? And there are different strategies, but one of a really good way is to have the insurance up front that will take care of you, and then you don't have to deplete your own assets. So tell me a little bit about long-term care insurance, and when is really the right time to apply for long-term care insurance?
Yeah, that's a great question. I mean, there's different rules of thumb with regards to long-term care and when you should actually look at it. And the thing with long-term care is that it's one of those things that you may never actually, you pay premiums on it and you may never have to use it. However, the majority of people are going to have a long-term care type incident in their lifetime that could, as you said, cripple their ability to, especially if it's the spouse, right? And I know this is crass to say, but a lot of times, people save up all this money. They want to live this dream, retirement, and maybe they have a house in Arizona or Florida, and they make all this planning to do, and then a year after they retire, one of the people has, like a stroke or a heart attack or something like that. And meanwhile, while that's happening, and like I said, it was crass to say this, in some cases, it's better off that the person were to pass away as opposed to living in a long-term care facility for a year or 2 years or something like that, because those things are so expensive. And while that's happening, it's depleting your retirement accounts, right? And all of your assets up to a certain limit, which changes every single year. But the reason we recommend getting long-term care, or there are some other strategies too, I won't go into those, but the reason we recommend getting long-term care is the fact that it's protection in the event something like that happens, right? So that your spouse or your loved one or your family is not going to lose everything because you get sick and unfortunately live too long, that it just depletes everything that you've saved your entire life for. And so it's just one of a few strategies that you can use, but it really is a fantastic, it's something you need to look at. I mean, it's part of a full financial plan. If you talk to any financial planner, they'll tell you that it is one of the steps that you need to take in the process, right? You're taking a risk if you do not have that. The chances that you are not, if you live to, let's say, 85, 90 years old, the chances that you're not at some point going to be living in a nursing home for even a few weeks is very, very slim. So it's something that everyone should definitely take a look at.
Absolutely. And I think, you don't, until you deal with a family member in that situation, or a loved one, you don't realize the cost that these places run $3,000 at a low end to $10,000, $15,000 a month. And so people are like, oh, I can pay for this. And then you start looking into it and you're going to pay $60,000, $80,000, $90,000 a year for this person, for your loved one to live in a facility. Do they have those assets to pay for it? Or do you have, the income, like if it's a married couple, right? Do you have the income coming in that you can pay for that and maintain your lifestyle? Because to your point, a lot of times, sometimes it'll be that a spouse has to go in and the other spouse is perfectly healthy and fine. So we now have to provide for dual housing, right? And dual care and all these other things. And so it can 100% add up over time for our clients.
And one of the things most people, when they're going through a retirement, when they're looking at retirement, they're planning a certain amount that they can live off of, right? A certain amount that they are going to, and that number, depends on what kind of lifestyle you want in your retirement. But most people have a plan of how much from a monthly perspective that they're taking in. Well, if something happened to your spouse, right, all of a sudden that's getting drained on a monthly basis, right? And as you mentioned, you're not working anymore, so you can't, maintain that. There's nothing else coming in, everything's going out, and pretty soon, it's going to be depleted. So, that's why you have the insurance, and it can literally save, generations, right? Generations of if you're planning on giving to your kids or your church or whatever, that guarantees that can happen. Again, you can use life insurance from a strategy perspective as well, but yes. Mm-hmm.
Absolutely. Well, and I think, kind of a little bit to your point of, you can use all these different strategies and there's all different things. And I always tell my clients, every situation is unique. Every family is unique. Every family dynamic, financial dynamic, all of those things are unique. And so I know you do the same thing we do with our clients, which is we sit down and let's talk about it. Let's talk about what your goals are, what's going on. Tell me about everything. I want to get to know my clients so that I can know, hey, this is what we need to do. And if they need to look at long-term care, hey, reach out to Matt. If they need something else, I have people to reach out to, but really ultimately so that they can protect themselves, so that whatever the legacy is that they want to leave for their family, for their community, for their charities, whatever it is, they have the ability to do so.
Yep.
So, And I know you do the same for your clients because we've helped some of yours, and I know you've helped a lot of ours. So we always appreciate it, including us, including Corey and I. So we always appreciate it. Thank you so much for being here. How do people get a hold of you if they would like you to talk to you about any of their insurance needs?
Yeah, of course. So phone number is 303-798-3081. You can call or text that. You can also email me at Matt, M-A-T-T, at MORIARITYAGENCY.net. You can find us on Facebook. You can find us all over the place. So, but yeah, no, I mean, to your point, I mean, that's the most important thing, right? A lot of people are afraid to ask questions, ask tough questions. But it would be worse after the fact because you can't go back and change things after the fact. So you have to ask those tough questions up front and make sure that you know everything about your clients so that you can properly advise them as to, what to do and at least make suggestions as to what to do.
Absolutely. I always tell my clients, and I think unfortunately it's legal and the insurance world are the same, but once something happens, it's too late for me to help. So from an estate planning perspective, once something happens to you, once you actually need these documents, it's too late. And I think same thing for insurance. Once you actually need the insurance, it's too late. And so it's always good to be prepared and have those things in place. So thank you so much for being here, Matt. I really appreciate it. And we will also put Matt's information in the comments below so you know how to reach out to him. But thank you again. We really appreciate you spending time with me this afternoon and your knowledge and your expertise as always. So.
Of course. And let me just say as well that we are clients of Stephanie's as well. And we send our clients her way too. She does a fantastic job. She is the best in her field. And, it's such a pleasure to talk to you and such an amazing honor to know you, because you really are special. So.
Well, thank you. And checks in the mail for that one. I appreciate it.
Make it out to Bash.
I know. I'll make it out to Matt, not the Moriarty Agency.
Right?
Awesome. Well, thank you so much, Matt. I really appreciate it.
Of course. Thank you.
All right. Bye-bye.